Ask Abby, providing answers, insights, and education designed to give you the tools and knowledge you need to thrive financially and live confidently in retirement.
Back with Abby Reed of the Reed Financial Group, the retirement family, as your resource, ladies and gentlemen, to help you address, answer, and be more informed on financial investment and retirement planning issues. She is here on Ask Abby each and every week, and you can submit your questions at goaskabby.com, goaskabby.com, or you can give a call 678-442-0255 to reach the Reed Financial Group and request your complimentary planning review and strategy session. Abby, we had a submission to goaskabby.com on the website. Jenny said her advisor has not mentioned Roth conversions, and when I asked, said it was not a good idea for me. Are there any times when moving money from tax deferred to tax free is maybe not the best idea?
Yes, great question. We hear this a lot. A lot of advisors, it's not something that a lot of advisors specialize in. We have had a relationship with Ed Slott for many, many years now. And he has consistently educated the financial industry on the power and the benefit of doing this proactive tax planning, because a lot of times CPAs, advisors, we're really just focused on reducing taxes in the current year as much as possible, because that's how we save money. And that's what we're taught. That's why we have 401ks, so we can, put income in there and not have to pay tax on it. And it's always defer the taxes, don't pay taxes unless you have to, push that can down the road, deal with it later on when maybe your tax bracket's going to be lower.
Yeah. But that's good until later on gets here, right?
Yes, exactly. And my number one complaint from my older clients is always taxes. It's always taxes. And unfortunately, what we see a lot of when we start working with people is of the three buckets. So we've got taxable, tax deferred, and tax free. Most of people's wealth is in the tax deferred, so 401ks, IRAs, and then eventually when you actually want to use that money, you've got a huge amount, well, hopefully a huge mountain of money, which is fantastic, but there's a huge tax bill in there.
That's actually the least tax favorable of the three buckets when it comes time to use the money.
Yes, exactly. So it's 100% taxable. If you take a big withdrawal, if you want to, buy a car or whatever, go on a dream vacation and you want to take a big withdrawal, that's going to hike your income for that year. And it's a domino effect. So that could increase your Social Security taxes. It could increase your Medicare premiums. I mean, it's a pain. So what we like to do is do proactive planning to where you have enough diversification in all three buckets, so that no matter the situation, whether taxes, go up in the future or whether they go down in the future, they'll probably do a little bit of both. I mean, if we're talking about 3 decades, we'll probably see taxes increase and decrease and, who knows. But it's a good idea to have some tax diversification as far as, the type of accounts you have. And so what we do with our clients is we look at what your current tax situation is, if there is a way to optimize your current tax bracket and fit some Roth conversions in your current tax bracket so you don't pop up into, maybe the next one, and managing the Medicare premium. So there's IRMA that we have to think about. And we have a process for all of that. So what we do is we do what we call a tax what if. So we look at, what if we convert, a certain amount, 30,000, 40,000, whatever, 100,000, what's that going to look like? What's the domino effect of that? And then from that, we can make a decision of whether it's a good idea or not, because Roth conversions, you can't undo them anymore. So it used to be if you did a Roth conversion and then maybe it had an adverse effect on your other taxable income, you could undo it, you could recharacterize it. That is no longer allowed. So if you do a Roth conversion, you better be sure that it's a good decision because it cannot be undone. And so that's why we run those numbers first, recommend a specific Roth conversion amount that's optimal for that client's particular situation.
Abby, it sounds like a lot goes into that. And maybe that's why Jenny and others may not be hearing about it, is because the process of figuring out when and how and where it makes sense seems rather complicated.
Yes. And this is something that classifies as more planning. A lot of times, what we find when we start working with people is they might have worked with an advisor in the past that was very much investment only. So they focused on just maybe the management of the portfolio, and then any other intricacies or income planning, things like that. That just wasn't their thing. They just weren't that kind of advisor.
That's a great observation, because I've often sort of wondered, what is the real difference in investment management versus true financial or retirement planning? And just what you said right there, from the tax standpoint, the income standpoint, therein lies one of the major differences that I can understand.
Yeah, and I think it's really a difference of having an advisor that has a very, I don't want this to sound bad, because it's a fit for some people that just they can do the planning on their own. They just want somebody to professionally manage their investments, or they maybe don't need that much help, or whatever. So it's not necessarily a bad thing or a bad advisor or anything like that. It's just a different approach. And so with our approach, it's, instead of having a very narrow focus just on the investment part of it, we have a holistic approach, because with retirement planning, there's just so much that goes into it. And it is the hardest phase of life to plan for. You're starting to take distributions from these accounts that you've been accumulating for your entire life. Taxes are different. You're not, for those that are employed by a company, for our non-business owners, they were getting that paycheck, getting a W-2, their taxes were withheld. And then you go from that to taking distributions from your accounts. You have to either have taxes withheld from that, or you have to send in quarterly payments. I mean, it's just one thing after the other. It's totally different. You have to figure out when the best time is to claim Social Security. What am I going to pay for Medicare depending on my income? When do I start taking distributions, and from what account? Am I taking too high of distributions? Am I taking too low of distributions? It's just, I mean, so much goes into it. And that's why we do a more holistic approach, because maybe in the accumulation phase, there's not as much that goes into it. There's still a lot, though, and a lot of times it's not looked at. The better planning we do in accumulation, the easier it's going to be in retirement. But especially when that switch is flipped and you go from accumulation to preservation, decumulation, that's when all of this really has to be looked at, because it's like, in kind of how I visualize it is, in our accumulation lives, we're kind of accumulating all these puzzle pieces. So retirement accounts at this employer, retirement accounts at that employer, maybe an IRA over here that you started 10 years ago that you kind of forgot about, a life insurance policy at your work, a life insurance policy that you got individually. It's like all of these things, and that's great because you're accumulating it. And then when you start to really want to look at when can I retire, it's our job to put all of those puzzle pieces together in the most efficient way possible, so that our clients can see, okay, this is the full picture. This is what I'm looking at. And that's, it supports making financial decisions that are in our clients' best interest when they have all that information in a cohesive place.
So you and your team there at Reed Financial Group help crunch the numbers, and because of the tax costs and everything involved, may not be for everyone, but if you're not at least discussing it and examining it, really could be missing some critical opportunities here, because it may be a shock to many, but we are at a historically low tax standpoint and environment right now. So it's a good time to do some proactive tax planning.
Yes. So we had some tax cuts for a lot of individuals, for a lot of people. In 2017 was the Tax Cut and Jobs Act. And so within that provision, there was a sunset stipulation where if certain criteria wasn't met, then the certain things like the tax brackets and all of that were going to go back to where they were, which means up. And so most likely, unless they decide to extend them, which I never bet on anybody being able to agree with each other in Washington. So right. I'm just, assuming that that's probably not going to happen. So most likely, and also, I mean, everybody knows our country is in just a massive amount of debt. And so they're looking for ways to raise revenue. Mm-hmm. And one of the main ways to do that, of course, is to raise taxes. So there's really no way around that. And we're in a tax rate environment that is as low as it's been in a very, very, very long time. If you look back at tax rates in the past, I mean, they are maybe double the max tax rates. They're double what they are right now. And we can certainly go back to that. Especially with what's going on, after COVID and the supply chain issues and inflation. And there's a lot of stuff that this country is up against. And we think that it is a pretty safe bet that taxes are going to increase.
Retirees are up against that.
Yeah, absolutely. Yeah, it's a lot of different things from a lot of different angles. And so it's a good time to take a look at that. Sometimes it's not the right year. Sometimes it's maybe hold off in one year and then do twice as much in the next year because for some reason you have a lower income that year, or maybe you sold an investment property or a vacation home and you have some capital gains. And so you got to look at not just this year, but also what's expected to happen maybe the next year and the year after that. So you can have a pretty, 2 to 5 year long plan of this is kind of our Roth conversion plan. And then each year as the client's income situation gets clearer, we can finalize those numbers, tweak the plan, but at least we have a blueprint of kind of where we're going and what we want to do.
And what did you call that, where you and your team crunch all those numbers and put it together so somebody can see them?
So that's going to be our tax what if process. And so that takes all of the numbers and all of the different incomes that you have and your entire tax situation, and it goes through a specific process. We'll go through a specific process where we look at, well, what if we make this decision and convert this amount of your IRA to a Roth conversion this year as well as next year? How's that going to affect your Social Security taxes? How's that going to affect your Medicare premiums? Are you going to go into an IRMA level? So it just takes all of the tax information and crunches those numbers and helps us to recommend the best and most efficient tax smart planning that we can do in the current year.
Hopefully, Abby was able to maybe address some of the reasons why you have not been talking about Roth conversions, or it may not apply, or given you some insight onto why you should continue to explore that, because there are some difficult and complicated issues involved, but it can be advantageous, certainly, to be moving dollars over to that tax-free bucket. And if you'd like to crunch the numbers, ladies and gentlemen, Abby Reed at Reed Financial Group, the retirement family, can help you do just that and really quantify and show you all of the benefits and disadvantages, all the things to consider when managing the investments, the retirement accounts, and the tax allocation that you have into and through retirement. Pick up the phone, give them a call, 678-442-0255, 678-442-0255, or you can go online to be in touch, goaskabby.com, goaskabby.com. Abby, always a pleasure. Another enlightening discussion here on some of the factors we need to think about in our financial lives.
Thanks, Peter. It's always a pleasure.
Go Braves.
Yes, definitely.
Here Here to answer your financial questions, visit the website goaskabby.com for show resources and to submit your questions and get answers, or to schedule your complimentary financial investment and retirement planning strategy session. You can also reach out to Abby directly at 678-442-0255. That's 678-442-0255 or at goaskabby.com.
Investment advisory services offered through Brookstone Capital Management, LLC, BCM, a registered investment advisor. BCM and Reed Financial Group are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Third-party ratings and recognitions are no guarantee of future investment success and do not ensure that a client or prospective client will experience a higher level of performance or results. These ratings should not be construed as an endorsement of the advisor by any client, nor are they representative of any one client's evaluation.